What's up, guys? Ego Complex. I want to go over with you the anatomy of a bear market because I want to give you some visual indicators so you can see this for yourself. Before we get into that, Discord link is in the description, guys. Come join our trading group. Check it out for a month. If you don't like it, full refund. I think you'll love it. Come join us. We trade in and out of the market. We use TA. We have no emotion. We don't care if Bitcoin goes up or down. We're here to make money. So let's look at this perspective, the anatomy of a bear market, from a couple different angles. When everybody's putting out Bitcoin videos with insane numbers, Ethereum videos with insane numbers, let's look at where we actually are. Keep an open mind. Remove the bias of whether you want Bitcoin to go up or down. Just look at the data. That's all I'm asking you to do. Originally, I had a pennant drawn from up here May 12th, which was about 58K Bitcoin, 59K. Looking at that first black candle is 58K. You see the crashes, okay? So I had a pennant top here, straight down. Pennant bottom here, over. I've redrawn this, but I want you to see the super guppy. This is all buying. The teal and the lime. Look at the difference of a bull run, okay? This is a bull run. When people said we were in a bull run, I missed all this. I wasn't in crypto, sadly. I mean, look at the teal and the lime. I think that's pretty obvious. This is, by the way, your 200 and your 233 moving averages below you the whole time. You look at the teal and lime, you had some selling, fell through the 200, you retrace, bounce off the 233, back up into buying. You're always going to have waves where you buy and sell, right? You keep following that, and then look what happened May 12th. I mean, guys, how do people say we're still in a bull market? You had one spike right here. Other than that, wall of selling. Not a little wall, although this is much larger than anywhere else in trend. These are the trends that you were getting with a little bit of selling. You had a bigger wall, tiny bit of recovery, as you can see. Boom, bigger wall. And by the way, what do you see here? Here, again, a failure point. You fall through the 200 and the 233. The 200 moving average is purple, 233 is green, right? You fall through them way down. You come back up, you get rejected by the 233. You get rejected by a 233. You get above the 230, the 200, you cannot hold it. You roll back down. You get above it, you cannot hold it. You roll back down. Guys, remember that pattern, okay? I know it sounds repetitive, but you keep repeating it. You get above the 200, you get above the 200, you use it as support, and then ultimately, this looks like a Bart pattern to me, the Bart Simpson pattern. After you come up off of a low or a high, and you just start cutting a flat top, right? You're just going up and down, up and down, up and down. You fail again. You fall below the 200 and a 233. You get above it again, right? Do you notice the pattern here, the trend of the 200 and 233? What happens? Ultimate failure, boom, big sell-off, big dip, right? From 58, you dip down to 29.5, okay? And you see the ranges coming back in here. You have a parabolic rise again. After this dip, you cut the Bart Simpson pattern, you fall. You rise up again, you fall again. Now, this is significant because this is all dead space here. Okay, this is all dead space. And much like my 200 and 230 and 200 MA video that I made, the only time since being up in the 50s that you've tested the 200 and 233, the only time you have done that is in recent history and recent past, right? So you have back on June 16th, June 15th it started. You have your high point here. June 14th, you're rising up. You get above the 200. You consolidate for a candle. You shoot up. You hit the 233 on the head. Reject it. Roll, roll, roll. Roll your boat down, right? Again, this fall from here to there was about 12,000 points. Let's measure it real quick. It's from the high of the first black candle in the trend to the low, 11,455. Okay, you fell 11,455 points last time you were rejected by the 233 and you got above the 200. You never reclaimed the 200. Use it as support, popped up, rolled back down, you got underneath it. 2 weeks later, You try this same move again. You start climbing back up, get above the 200, get above the 35, which I said we were not going to be able to hold, get above the 200, which I said we can't hold, hit your head on the dollar on the imaginary pennant here, hit your head on the dollar, never even get a chance to test 233, and you roll, and you're selling off. Now people say, where would we fall to if we fell? I'll show you that in one moment. But I want you to understand this concept of lower highs, okay? This is very important, the making lower highs. Because don't include where we fell from, right? May 12th. Obviously, this is a lower high. You start looking at these highs because this is your peak. You got the 41 after falling from 58, 57, 58. You got the 41, that's your high. From May 12th to June 15th, right? Over a month of trading days, it took you to get back up to 41 from 58. It's a 17,000 point declination right there, just between those two destinations, 17,000 points. And then you have within the pennant that we have formed since that date, again, 2 weeks later, where's your highs? Make a lower high here. This is your high of 35.5, and then this is your high of basically 36, right? 36, 33. So you get the, after you fall from 58, you get a high of 42, 41.5, and then you go to 35.5, and then you go to 36, and then you roll again. Meanwhile, you're crashing 28,790. That crash, that 11,500 point crash, got you 28,790. This rejection by the 35, right? This was the first rejection by the 35, got you to 30,086. Climb back up 2 weeks later, took 2 weeks. And notice what else is important here. What's happening with these lines? They are descending, right? The market is shrinking. This is what I was saying in our Discord. So you're testing the same key resistances that blew you away up here when you're in the bull market. They killed you up here, right? So you see that. They defeated you up here. You could not hold them. You rolled from them. And after you rolled, you tested them again twice more. So that's strike one up there. You test them right here. This is strike two down here. Right? You test them again. Guess where you test them again? You test them again down here at 36. Right? So we're circling all these, so when we zoom out, you can see the bigger picture. And you didn't even get to test both of them this time. You only got to test one, and then you roll. Now, let me show you where you're going to roll to. Because, again, pattern completion and charting, this is just by the book, okay? This isn't a prediction. This isn't something that's definitely going to happen, not happen. But this is by the book charting 101. The way you establish where you would fall from is you take the width of your pennant, right? It's the back base here. You imagine where you would fall from. Let's just say about here. You see price could just be, zigzagging here and descending, right? So let's see where that is. Well, it's about 17,186, give or take. Doesn't have to be exact, so I'm just painting you a picture here so you can see it. If we were going to complete a pattern fall by the book, charting 101, you're going to 17K Bitcoin. It doesn't take into account your buy walls, doesn't take into account market sentiment, doesn't take into account news. There's a lot of features that are not taken into account. So that's why I gave you this prediction of 20 to 25K Bitcoin, because our original pennant that I drew brought us to 22K. But you guys, the lower you keep going as you wave down, your price keeps getting lower. That's the key here. And again, so you see the circle. The strikes of this is against the 200, against the 200, 233, against the 200, 233. You look at that trend. Where's the bull trend in this again? That's what I want to understand. When we finally got velocity to retest the 200, we failed at a lower price than we had here. So you go from 57 to 41, 16,000 points, and then from 41 to 36, another 5,000 points. You've declined 21,000 points since May 12th, and people still make Bitcoin 200K videos. Bitcoin gonna melt your face videos. Look, my next price jump for Bitcoin. Look, I will be bullish when there's bullish information that's available. You look at the color scheme here. If you were an alien and all you knew was colors, you didn't even care about these ups and downs, and this is the only spot you saw in buying over the last month, how could you look at this? Actually, it's been longer than a month now, hasn't it? It's been, what, 6 weeks? How could you look at this and say we're in a bullish trend? You can't do that objectively, guys. I'm sorry. You just cannot do that. You are in a bear trend. And if you fall, you do run that risk if nobody supports you at 20K, 22K, at 24, 25, 26K. You run that risk of hitting this magic number down here of the 17, 16 number. Depending, again, this moves depending where you fall. Okay? So, again, that's the bear market side of it. This is the objective data analysis. And the only thing I see that can save you from this, the only thing when people say two-part bull run, well, what does that mean? Okay, objectively, let me tell you what that means to me. What that means to me is you actually have a real crash where you crash to a level where prices are so good, retail steps in, the financial institutions can't resist, and everybody buys in, right? Because again, I'm not going to throw the volume, well, I'll go ahead and throw the volume up, but everybody's going to have to buy in for you to have the volume you need to climb. Because as you can see, you pull this price in, you have to have a lot of volume to climb up. And even with all this price history in the picture, right? Look at this price history I'm pulling in here. This is from February, okay? Because that's what the candles are reacting to is a volume. They react to the volume that's in the price history that you're currently viewing. So if you remove some of this history, you see the candles react to it. They shrink down. So you bring the history back in, candles pop back out. This is a big gap. Look at this. You'd have to climb this gap somehow to be able to get above. I mean, look at these candles. So right here, by the way, where your peak was, this is your volume. You have the last hope here volume candle holding that peak, which is why I was able to predict that we would roll. That we fought this for 2 days in this area. Everybody and their mom was making 50K, 75K, Bitcoin back to 100K videos. Except me. I said, the longer that we take to defeat this, the more likely we are going to roll. And if we roll, we're going to fall. We're going to fall, I said, to at least 31. And the death cross was coming in. I said, we're going to get pushed to the high 20s. And that's exactly what happened, guys. So again, objective data analysis. Don't have a bias because you have coins or have a position. But what I'm saying is if we have a dump that's so low, and I don't know what that number would be, 20K, 25K, wherever people that are in tether or people that left the market at a sheer boredom and repetitively getting wiped out between the manipulation of whale candles and then the repetitive crashes every single week in May, a lot of people left. But if you get prices to a point where people buy in organically, this volume, you want this volume to keep coming out because, again, I've said this in my other videos, look at the volume up here at the 60, 65K level. Look at that. That's insane. Look how minuscule that is, and then you correlate it with this because that's where that volume is. That's why you can't even get above the 200 and hold it, guys. This was your peak. There's nothing to stop you from climbing back out of this, but it would take massive volume. It would take this level volume that you have here going up and it increasing to hold you up as you climb. So what I think is actually going to happen, there's two different scenarios here. This is what I wanted to cover in the anatomy of a bear market. You can see again, declining highs, right? I'm only counting the highs where you test a 200, right? And it happens to be the highs in the range. You test a 200 up here, 58, 41, and then you're down at 36, right? 21,000 point declination. There's two things that are going to happen. The bullish scenario is on the table. I don't think the likelihood is high. I mean, like I said, it's going to take an extreme amount of volume. I hope it does happen. I would like to be in this market much longer. But really, the two scenarios I want to cover, because the bullish scenario is self-serving, you can understand that. The two scenarios I really want to cover with you is range trading. So when this pennant was bigger, and we were range trading, and we were back here, right? In this range, we kept crashing down, dips, dips, dips. Look at the range, how it's shrinking. So we had the one peak at 41, the 11.5 declination to 28.7. We went from testing the 200 and 233 up at 58 to testing the 200, 233 at 41 and then at 36, and we lost all three times. And the point being, this is a descending indicator. These are moving averages, they're descending. So when we do fall and we roll and we land somewhere between 17 and 25, this range south of here, south of my cursor, and you start climbing back up, you have to understand the 200 moving average and the 233 SMA, they're coming down too. Okay, we may be retesting these at the 30, 31K level. So we already lost 3 battles with them. If we lose a 4th battle, what does that mean? Well, this is simple, guys. What that means is Bitcoin's going to roll again. So one of two things will happen. We either climb back up from where we crash, for easy math, let's say 25K. You climb back up. The 200, 233 have descended. Let's say, let me draw this so I can give you a visual image. So let's say the 233, where's 31K? Right in here. I'm just going to draw it off to the right so you can see it. Let's say the moving averages come here, right? So you have your line coming here, your 200, your 233, they're coming here. Price falls down here around, let's be generous, let's just say it's around 24. So price is down here at 24. As price starts to rise, one of two things will happen. You're going to hit these two moving averages. If you get rejected, you may retest. This may take a day or two. If you get rejected, you're going to roll again, right? And you're going to find a bottom again. It may be the exact same bottom you fell from, or maybe now it's the 17,186, right? So this is scenario 1. Scenario 1 is the range keeps shrinking from 58, 41 to 36. And now you're here at the imaginary 31 with the moving averages. You test them, you get rejected, you make a new bottom. And again, what will happen in that scenario, to complete this scenario, now this is your bottom, 17.1. Now your price is going to do this again over a period of a week, 2 weeks, however long it takes, 5 days. And then the moving averages again are still descending, right? They're still descending. So you're still going to meet. And then if price is rejected again, you're going to come down again. And then you're making a series of lower highs, guys. You're constantly making lower highs. This is why you have to understand a bear market is a contracting market. That's all that it is. If we go from 57K on May 12th and we're down at 30K, if this scenario 1 plays out, right? That's almost a 30,000 point declination. That's not a bull market. I don't care who makes a video saying that's a bull market. They're either intentionally misleading you or they're ignorant to actual charting and technical analysis, because you can't keep making lower highs, getting rejected by the same 2 moving averages over and over again and say you're in a bull market, right? So let's clear this off. Let's get rid of this. I like to use the eraser. All right, this is faster, usually. So I'm going to clear these off. So scenario 2 is going to be if we come up and we test. If we come up and we test, this is going to play out differently. So scenario 2 would be we still fall, right? We still got to fall. We find a bottom. Doesn't matter where. We find a bottom. Moving averages still descending, like we said. They're still coming down. Price does this. Price comes up, price comes over. Again, this could take 5 days. This could take 2 weeks. It can take however long it takes. Let's leave it there. Moving averages still coming over. Boom. Impact. 233 is a little bit above. Boom. Impact. So you have this. This is scenario 2. So scenario 1, we meet them at this new lower level. We fall. You make another lower high. You reject it 4 times. Scenario 2, you meet them. Price comes out. Price rises, right? This is scenario 2. This scenario will only work, in my view. This is only going to work if we have the organic buying. We have the support of the whales, of the institutions, and of retail. It's the only way this is going to work. So you need to remember that, because you have to defeat these moving averages, hold them as support, because previously we defeated them. We defeated them for 2 days before and still rolled. You have to hold them as support and grow. And then, even as you grow, you got to get through all the different resistance levels, right? Which is possible. I'm not saying it's impossible. But when people say, oh, we got to get to 41.5, you know why they keep saying that? Because that's that swing high down here after the descent. That's why they think that's such a key number. The price has to get above that to be making any progress. And then from there, guys, but look at the volume. Again, that's why you fell from here. You can't have a volume peak like that down to that and then support the price. And this is overall why I am bearish, because the market's contracting, multiple factors. The market's contracting, you're being defeated by the same resistance levels, and you don't have the volume support. Now, hey, look, the volume could step in. Again, in an organic buying situation scenario, this scenario two, volume could certainly step in because of buying, and you just keep legging your way up, eventually getting above. You have to get above 57.58K. You have to make a new high that began the trend to reverse the downtrend. That's a reversal. Reversing above 41 is not a reversal because the downtrend started up here. So we have to be analytical about this situation, understand the pros and cons of where we are at, because guys, it's your money, right? If you're in a contracting market, a shrinking market, you can still make money. How do you make money? You buy on these dips, you sell when we make a peak. Then you buy on the dip, sell when we make the peak. If you do futures, you buy at the bottom, you buy along at the bottom, sell it at the top, sell it at the peak. You do a short, you short at the peak, you let it roll back down. Now, as the market contracts, the bear market comes into effect, right? So everybody wants the market to correct and go back up. I'm telling you, if we don't get a low enough dip, if this dip just goes to 27, 28, you're going to have the same thing repeat. We're going to fail at 35 again. I'm telling you that right now. If we get to 27, 28 on yet another dip, that's our trading range. Our trading range is 35, 36, 37, because we did get above 35 and then we fell right back down. So that's your new range. In May, it was the 42K level over here, and it was the 30K level that we kept crashing to, right? In June, it was the 41.5 that we failed down to the 27.9. This is your trading ranges. And now if we come back and we get rejected again, and we but first we climb and we get rejected by 35, your price is literally just legging down. That's all it's doing is legging down. The way this is legging up, you're doing the reverse going down. So keep that in mind. Again, anatomy of a bear market. Don't have a bias as to how you view this. Don't view this as I have so many coins. If you have coins, sell at a high if you know you're going to dip, right? Knowledge is power. Everybody wants to hear good news. Everybody wants to hear they won the lottery. Nobody wants to hear 99% of their lottery winnings are going to be stolen from them, right? So just be aware of the anatomy of where we stand now. Use your own indicators, do your own studies, but we are definitely dipping into the 20s, my friends. That's happening. There's nothing that's going to stop that. You can have a whale pump, that's going to be a temporary fix, just like that double top reversal. And eventually you're coming back down again because there's no volume, right? That's just one indicator. Massive selling, another indicator. Current trend is down. The fact that we are in a pennant again, trading in a pennant with a bias to break down, and the pattern completion of said pennant brings you to 17,186. I don't see the bullish news in that. The bullish news will be when we crash, if we can do this and get above the 35, get above the two moving averages. That would be the bullish news in a bear trend. And you are in a bear market, my friends, until you reverse above 57, because that's where we fell from 6 weeks ago. Not 2 days ago, 6 weeks ago. And then all we have done since then is make new lower highs in the range. And then we make lower lows as well. We go back, we vacillate a little bit on the lows, but this was a new lower low, and we're going to make a new lower low possibly this weekend, depending how dumpy it is. So that's where the data is now, my friends. We're going to track this every day. I hope you gleaned something from this video. I hope you like it. I know it's not a positive, go happy video, but there's always opportunities to make money. Just remember that. Don't be biased just to say go up, just so you can make money on the upside. There's money to be made buying the dips, trading in the range, and there's money to be made in futures. There's a lot of different options here, guys. Good luck. Happy trading. Thanks for watching the video.